Swiggy's IPO has been one of the most talked about market events, but has the company lived up to investors' expectations? To talk more on this, I have Giriprakash with me. Thank you, sir, for joining. My first question is Swiggy's IPO generated significant buzz, but how has it fared on the market since its launch? And how are investors confident in its long term growth, or is there any skepticism about its valuation and strategies?
Swiggy is concerned, what has happened is that there's some good news for Swiggy investors because of the UBS, which is a rating agency which has initiated coverage on Swiggy. It has said that it has recommended a buy rating for Swiggy, which means that what a buy rating is. It's saying that it is asking investors to go and buy Swiggy stocks. So there's some kind of a confidence in that. So what it means is that Swiggy is a safe bet. So therefore, you can invest your money into it. That has led to Swiggy's share prices going up by around 20%, and that means that it has done extremely well. But it was not so when the IPO opened on November 13th. It had a listing price of 420 rupees, and it went up to around 464 rupees per share. But the subscription rate was just slightly less than 4 times, which doesn't say anything good about Swiggy. And so the investors were very cautious about it.
With competitors like Zomato expanding their offerings and quick commerce models gaining momentum, does Swiggy's positioning as a convenience platform give it an edge, or is it losing ground?
According to a report from JP Morgan, the Swiggy's Instamart, which is a quick commerce arm of Swiggy, apparently, according to JP Morgan, it has emerged as the fastest player in India's rapidly growing quick commerce sector. Now, we all know what quick commerce is, that if you order for any kind of, it could be food, it could be grocery, it could be anything, your ability to get anything, you should be able to deliver that product in, say, the quickest possible time compared with your competitor, for example, Zepto and Blinkit and all that. Apparently, Swiggy has been able to do that in 8 minutes, though it had promised that it will be able to get it done in 6 minutes. So in 8 minutes, whatever that you order, it will be at your doorstep. So therefore, according to JP Morgan, it is the fastest growing quick commerce company.
Critics have questioned Swiggy's valuation at the IPO stage. What implications does this overvaluation have for its brand credibility and investor confidence?
Brand valuation is concerned, we know that it didn't have a very sound start when the IPO opened for investors. So that does give some kind of a commentary on its valuation, and basically because of the very big player there, which is Zomato. So therefore, it is given that uh, uh, kind of a valuation when you compare it with, say, Zomato. Now, let us look at some of the other factors why this has happened. If you look at Zomato, it has actually, profitably, it's a better company than, say, Swiggy. And then there are challenges which Swiggy faces. There is no clear path to profitability, and therefore the investors have done some kind of a wait and watch approach. They adopted that, and the food delivery market is becoming increasingly competitive. And therefore, if you look at Zomato, it has actually outpaced Swiggy in this regard when it comes to certain key metrics. And the if you also look at the broader issues, it is seen as a cash burning startup, and which has also influenced the investor behavior. So that's the reason why IPO didn't take off as it was expected. But having said that, what is important to note is that the two big competitors in the quick delivery segment are Zomato and Swiggy, right? So Swiggy may be lagging a bit, but it is giving tough competition to Zomato, and therefore it's a stock to watch out for as far as the investors are concerned. And we will get to know how Swiggy has performed during the last quarter in the first week of December when the quarter results will be out. But at the same time, it is a wait and watch stock as of now.